Hey, what's up? In this video, I'm going to answer some really important questions about life insurance, the different types of coverages, the different types of policies, and the way that some of them work and how you can benefit from them. And also just learn more as an expert, an agent in life insurance to help more people and more customers. So let's dive into it. Okay, so there's three major types of life insurance. The number one most common is a term life insurance policy. That is a set period of time, let's just say 10 years or 20 years or 30 years for $1 million in coverage. That means if you die within those 10 years or 20 years or 30 years, depending on what type of policy of term you buy, your beneficiary will get paid out. It's a cheaper policy. It's a little bit less expensive than like a permanent policy because it is going to eventually run out if you outlive it. So that's a term policy. The other type of policy is a permanent policy that I mentioned. That is exactly what it sounds like. It is permanent. It is going to be there for the whole life. It's also called a whole life insurance policy, but it will be with you until the day you die. So that is more expensive. Simply because it never runs out. It is guaranteed to be there with you. It also has a couple other bells and whistles that come with it. A lot of people know this as cash value, where you are paying your premium and it builds up into like a little, imagine like a savings account where you actually can, after a couple years of it building up and paying into the policy, it starts to accumulate cash value that you can actually access while you are alive. So you can borrow money from the cash value, and that still keeps your policy active. So that's one of the major benefits of it, is that it almost acts like a little savings account. You're paying all these more premium, but it's building up some cash value. And the third type of policy, another very common one, is called accidental death. This is not necessarily like a term or a whole life where pretty much any death is covered. Regardless, the only thing that's typically excluded is suicide within the first 3 years of a policy. Accidental death is exactly what it sounds like. It's if there is an accident that happens, like car crash or plane crash, train crash, all these different types of accidental deaths that there's a long list of what's covered and what's not covered. But if you die from sickness or an illness, you would not be covered under an accidental death. That's not an accident. So yeah, those are the three main types, and there's several other types of policies, final expense, etc., etc. So but those are the three main ones that most of the times we're seeing customers buying. Okay, so is it better to have a term life insurance policy or a whole life insurance policy? The answer to that is it really depends on what you're looking for. It's almost always better to have a whole life policy because it's guaranteed no matter what. If you truly believe in life insurance and you think it's the right thing for you, you should have a whole life insurance policy. It's going to be more expensive, but it's going to be guaranteed no matter what. As long as you keep the policy active, it will be there for you or for your beneficiary till the day you die. The term life insurance policy, it expires. It runs out after, let's just say, 10 years or 20 years, depending on what type of policy you buy. But those serve their purposes too, because if, let's just say, you have a mortgage on the home and you just don't want your family, other than that, you don't want your family to have any other debt, and you just have an outstanding debt of $500,000 mortgage on your home, you can, and it's going to get paid off in the next 10 years, then you really just need a $500,000 term life insurance policy for 10 years. That covers you for the next 10 years. It's going to be much cheaper, and it's going to guarantee that your family is good in the event you pass away and there's a mortgage left over to your wife, your husband, your kids. So that's there are two different purposes they serve, but ultimately, like if you really believe in life insurance and you think it's something that's really important for your family, the best thing to do is just get a whole life insurance policy, pay a little bit more, and make sure no matter what, till the day you die, your family is covered and protected with a big tax-free sum of money that you can also, the other massive benefit of whole life is that you can build up cash value and borrow money from it. So it's not like it's all, the premiums just all going to life insurance. You can actually access some of that tax-free, borrow from the policy, and use it to your advantage while you're alive too. So my personal opinion, whole life insurance is the way to go. Yes. At what age should you be buying life insurance? And the safe answer is always yesterday. The younger you are, the better when you buy life insurance. If you can lock it in for, a longer time period at a younger age, it's always the cheapest and the best way to go. The older you are, the more it's purely just based on your age, your health. So the best thing to do is while you're young, while you're healthy, get yourself a good policy in place and have it in place for the rest of your life or for at least a long term. That way, if something ever changes, health-wise, you never know. You might not even be eligible for life insurance, or your rates are just going to be dramatically higher later as you get older. So it's always best if you're 18, 19, 20, 21 years old. I know it's not top of your priority list, but get yourself a life insurance policy. You will not regret it later in your life. If you die, your life insurance policy will pay your beneficiary completely tax-free. So if you have a $1 million policy and you die, whoever, the wife, the husband, the kids, they will receive that $1 million completely without taxes. So if you outlive your life insurance policy, you are basically, I hate to say it, you're kind of screwed. You've paid for the last, let's just say 20 years, your premiums, and now your policy has expired, you no longer have coverage. You would need to reapply for a new policy if you want coverage, and at that point you're going to be paying a significantly higher rate because you're older. Who knows, maybe your health has changed a little bit, you got a little cholesterol, and now you're going to have to buy a new policy for another extended term, and that's going to be significantly more expensive than what it was 20 years ago. Is life insurance meant for people that are alive or people that are dead? That's a great question. It's actually meant for both. People that are dead, obviously, your money goes to a beneficiary, your husband, your wife, your kids. If you have $1 million policy and you die, they will receive $1 million tax-free. If you're alive, and you have a permanent policy and you're paying your premium every single month, it's building up what's called cash value. It grows like a little savings account, and it is growing. It actually has some interest growing every single month, every single year, kind of like an IRA or a 401k. The only difference is that on a whole life insurance policy, you can borrow money from that account, that little cash value account, tax-free as well. Unlike an IRA, 401k, you cannot borrow money from those. You have to take money out, and you get penalized with a big penalty because you're pulling it out before a certain age for retirement or whatever the IRA requires. The whole life insurance policy you can actually borrow from tax-free and use it while you're alive. Put that money into real estate, go invest in whatever you feel like investing in, use that money for whatever. But it is cash value that is your money, that is growing tax-free, and you can borrow from, use it while you're alive. So it's not just for the dead. Life insurance has some great benefits for people that are alive as well. Typically, you cannot cash out a term life insurance policy. A term life insurance policy is a cheaper option. You pay your monthly premiums for a certain period of time, let's just say 20 years, and that money is going purely to life insurance. You can't cash out like you can with a whole life permanent policy. If you die, somebody gets the money, but if you outlive that policy by 20 years in one day, you're pretty much screwed. It is what it is. You paid your premiums for the last 20 years and you no longer have coverage. What's better, a 401k or a life insurance policy? The 401k and the life insurance policy serve two different purposes. The 401k is growing tax-free money as you put money into it every single month on your paychecks, and eventually you can cash out at 65 years old. The life insurance policy is not only just protecting somebody like your beneficiary, your wife, your kids, your husband, whoever it might be set up on the life insurance policy, but it also grows tax-free, like a little savings account called a cash value. The major difference, and this is why I'm a big believer in why you should get yourself a whole life insurance policy, is that you can borrow money from that cash value account tax-free and use it while you're still alive. You don't have to wait till you die or a certain period of time to pull out the money. 401ks, you get huge penalties if you pull the money out early. So the whole life insurance policy is the way to go. If you want to lock your money up till you're 65, by all means, go for it. 401ks are great. They serve their purpose for retirement. But the whole life, it gives you a little more flexibility, a lot more access to your money, which I'm a big believer in, and also protects a loved one if you do pass away, to protect whatever debt or things you might have outstanding. So typically, like if you're above 60 or 70 years old, life insurance becomes a lot more difficult to get. You can still get it, it just tends to be way more expensive. Also, if you have any medical conditions, at that point, it's going to be very difficult to get approved by a life insurance company. It is purely just based on, the risk that the company is willing to take to pay out $1 million and the amount of money that they need to receive to make sense of that policy. So, life expectancy, I think in the US is something around like, for men, late 70s, early 80s, in that range. So if the insurance company sees that you might die in the next 10 years, they probably don't want to insure you for a little bit of money. It's going to be very, very expensive. Yeah. So the one thing that life insurance does not cover is suicide in the first 3 years. It's one of the only exclusions that exists. So if you live past 3 years without killing yourself, you're going to be covered. Okay, so those are some general questions and common questions about life insurance and some really, really important facts that you should use to your advantage when selling life insurance. Hopefully those cleared some of those up, and if you were unsure about certain things, and maybe brought you some valuable knowledge. Really appreciate if you guys give us a like. It helps us reach more agents. If you want to talk to me directly, hit me up on my Instagram, Chris the Insurance Guy. Super easy to find me. And then I also do like one-on-one consulting at chriscostantini.com. And yeah, that's pretty much it. I hope those tips helped you. Subscribe if you want to see more of these videos. Ring the bell for notifications, and we will see you guys at the top. Thanks. Peace.